Big news in the crypto world, the Gemini Space Station is blasting off. With $425 million raised and NASDAQ on board, they're set to pipe institutions into crypto. But with shrinking exchange revenue and heavy losses, can Gemini really steal market share from Coinbase? Or is this valuation just from another galaxy? Join the conversation. What do you think? Comment below and let's discuss.
Gary, let's get to thing number 2. We're talking Gemini. And we haven't seen a lot in the IPO market recently, but Gemini had their IPO, and we're talking here Cameron and Tyler Winklevoss, crypto space, but then the space station, of course. So Gary, thing number 2, why the NASDAQ is betting on Gemini Space Station. That's Gemini ticker GEMI.
Yeah, so I don't know why they called it Gemini Space Station, but that is what it's called. The ticker, as you said, is GEMI. But for clarity, it is the crypto exchange founded by Cameron and Tyler Winklevoss. They raised a little over $400 million in an IPO last week, pricing shares at $28. It valued the company at $3.5 billion. Depending on the metrics, the IPO price was well above the initial expected range of 17 to 19. That's the recent IPO market has been strong. The deal was oversubscribed. The two things that jump out at me, one is it's worth pointing out that Gemini enters the public markets with losses of $282 million in the first half of 2025. That's an increase versus $41 million a year earlier. Revenue declined slightly in exchange business versus last year. So, it's really interesting that the offering was so oversubscribed and the valuation was high, but, they've not been producing profits and the revenue is down. So it'll be really interesting to see what they do. The other thing that really jumps out at me is the NASDAQ itself made a $50 million private placement investment into Gemini Space Station and also entered into a broader partnership with the exchange that's going to give NASDAQ's institutional clients access to Gemini's custody and staking services. It's going to provide use of NASDAQ's Calypso platform for managing collateral. So basically what the NASDAQ is telling you is we don't want to get left out of the crypto space. We are no longer just equities.
Yeah. Interesting. Gary, with recent landscape, just from a regulatory standpoint, obviously, and just in general, reins, I'd say loosened, right? If you were looking at it on a spectrum, I mean, how much of the NASDAQ's interest is kind of due to those loosening reins?
I think it's a huge amount, Rob. The fact is that institutional investors and exchanges like the NASDAQ have wanted to be involved in the crypto space for a long time because the returns there have been really good. And so the reason that they didn't, or a reason that they didn't, is because without a regulatory framework, they don't know what they can and can't do. Now, I think that's kind of silly. I think just conduct your business ethically, saying we need the government to give us rules so we know what to do, whatever. But that's the environment that we're in now. We do have a very litigious society. So the fact that the Trump administration has been so pro crypto and so pro Bitcoin, and then on top of that, you had the approval of the Bitcoin ETFs a year and a half ago. And then also you had the Genius Act, which basically gave the institutional investors an on-ramp into investing in crypto and made a lot of these things possible. So I think we've had a huge change in the regulatory environment, and you're seeing the exchanges follow in and institutional investors follow in. I think NASDAQ making an investment directly into Gemini and having cross-platform resource sharing, I think that tells you a lot.
Gary, with that, I think it brings attention to the stable coins, right? And without getting too deep into that conversation, DKI in the past, right, talked about stable coins, a threat to overall profitability, especially for the big banks, right, with these stakes. how does this affect your view? And then, I mean, regulatory environment too. I mean, what is this what we expected? I feel like yes, with Trump, right? We were getting a more pro crypto environment, but I mean, yeah, how does this kind of shake your footing, right, as it relates to the stablecoin nature, staking, and then, what is a loosening regulatory environment, which I think was expected, or did you expect that?
Well, I don't think that any of us expected a year and a half ago that the crypto space would have received as much regulatory validation as it's received. I think, I think people in the crypto space are thrilled at, seeing the Bitcoin ETFs approved, seeing the Genius Act pass, seeing stable coins getting, institutional adoption and being approved, seeing the NASDAQ take a stake into Gemini Space Station. Like I don't think any of us would have expected that a year and a half ago. So that I think is all positive. Regarding the stable coins, I think what's happening is just validating my point of view on it. I'm here in Madrid and I had lunch over the weekend with somebody who's doing some really interesting work in the cybersecurity and crypto space. And he set up companies to do high frequency trading in crypto. And I was seeing what he was doing. I thought it was really interesting. And he said, don't you think that stable coins are a threat to Bitcoin? And I said, no, not at all. Stable coins are a way to trade fiat exposure. Bitcoin is a way to get out of fiat exposure. That said, I still think stable coins are going to be a thing. And I think they are a huge threat to the big banks. And think about, we all pay the banks all kinds of fees. And if you want to send a wire, you pay fees. And if you want to send money to somebody, they say, oh, yeah, we can probably do that by the end of the close tomorrow. Right.
Yeah,
Like,
maybe.
I had somebody who tried to send me money on the 31st of a month and I didn't get it until the 3rd of the following month. Now, why is that? So it's an electronic
Yeah.
transfer. It could have been
My
done
my
instantly.
my wife in all her cuteness says, "Why is it so easy and quick for them to take money out of my account versus
Right.
putting it back in?" Yeah.
Well, here, Rob, that's 100% true. But like, let's amplify it even worse. Let's say I want to send you money and I send it through Venmo. You get it essentially instantly within seconds, right? You get confirmation that Venmo money is in your account. So somebody tell me why Morgan Stanley and Citi can't. And my answer is they can. They just don't
Right.
want to.
Of course.
Right. So I mean, for us to be able to use stable coins and exchanges to send money to each other instantly. And by the way, earn interest on it. And somebody could say, well, yeah, you can earn interest on your checking account. Yeah, sure you can. But how much? And we've
Right.
all seen, right, how much? We've all seen how little the banks pay.
Zero.
So I think, I think stable coins are a
Zero,
huge threat
zero,
to the banks.
zero of a declining asset.
Yeah, exactly. Right. Get out of fiat